It's Sunday, September 29th, 2019. This is all about your Benjamins and your weekly mixtape and weekend review. Let's get straight to the headlines that may or may not be impacting your financial plan and portfolio. And we're going to start with a broken record. China-US trade talks. October 10th is the date. Mark your calendar. That's the next time these two countries are scheduled to get together and talk things through. I joked about this on the rundown earlier this week, but this is a cycle that we constantly see. We have some good news, we have some bad news, we have a new tariff, the tariff is brought back, it's reduced, and then we keep on going forward, but really not going anywhere. So it'll be interesting to see if the 10th actually holds, if the meetings actually are completed, and what might come from it. I think we're getting to a part where both sides would benefit from some type of resolution coming through, so we'll see if we start to have any real progress now, or this just continues the headline cycling of whipsawing the market back and forth based off of one day's headline about the China trade war with the US. So that is that. Let's get into some economic data, a few things. There's a headline that you'll see from the Wall Street Journal that says, global slowdown spreads to the US. Well, in August, the consumer spent less money and businesses spent less money as well. So this is saying or questioning, is the slowdown we're seeing across the globe beginning to make its footprint here in the US? 1 month is tough to tell, but if we're talking about the fear of a recession or a looming recession coming along the way, if we start to see the consumer spending less, we see businesses spending less, that trickles into businesses making less money over time, which could be the beginning of a slowdown in the economy. So we don't know what it means. It's 1 month. It's a small sample in the big picture, but it is something worth looking at. It is reflective, so we don't know what September will look like. But if we start to see multiple months of this being the trend, then that might mean we're a little bit closer to that recession that everybody's been talking about. So that is one piece of economic data. The next one is about inflation. We've talked about inflation a lot over the last year and a half, mainly because of the Fed, but in August we saw inflation rates actually go down. So you might think that is a good thing at first, but remember, there's a range that the Fed wants inflation to fall in, and if we go too low, we fall into a deflationary state, which is a whole mess in its own. So this is why I would never want to be a part of the Fed. A tricky dynamic to keep this metric in between a certain level. We don't want it to get too high, but we want some, and we don't want it to go too low, and so it drifts around. So I don't think this is anything major, but it was just a headline that caught my eye since we've talked about inflation a lot over the last year. The final economic piece of data was consumer sentiment, and the last week of September was up. In August, consumer sentiment was down. So again, a lot of these pieces are they're all backward looking, but what they mean can be more forward looking, can be more backward. Actually, it's hard to figure out how to use all this information, which is why investing is a tough thing to do, especially when you're using data points, because you can find data to make any argument work. So the consumer is feeling better, although in August they spent less. So since they're feeling better, did we spend more in September? We'll have to wait until next month to see, but it's all a lot of information that we're trying to digest. But as I say, more Wall Street and investors are trying to digest this. I think us long-term financial planning clients, investors for the long term, it's not so much trying to digest this information rather than just understanding what's going on, understanding the narrative, where things are going, so we can be proactive with our planning. So that is the last piece of economic data. The other big headline that came out this week is the beginnings potentially of an impeachment process, or an inquiry, I guess we should call it. So that'll be a headline thing. It looks like it's moving forward. There's the whistleblower news out there. So a lot of news out there in Washington, D.C. that could have implications on the market in the short term as well. There's been plenty of pieces written about, what does an impeachment mean to the market? Every situation is different, so we can't fall back on what's happened in the past, if it gets that far, to determine what might happen this time around. So I just would be aware of that headline. I'm sure you're aware of it, and then we'll plan on seeing how that plays out in the market and what that means in the short term. And finally, this was supposed to be a big year for IPOs, companies coming to the market for the first time, and it hasn't been very friendly to a lot of the big names. There's been a lot of successful IPOs, but the big names like Uber and WeWork pulled back out. Peloton just went public this week, and I'm a big Peloton fan. I have a bike, and its stock did not have a great first couple days on the market as well. And there's a company by the name of Endeavor, which is basically like an agency. They pulled their IPO after seeing Peloton's lackluster performance on its IPO day, the day after. So I bring this up and just that Earlier in the year, there were some rumblings that right now tech is a lot like 2000, and that's not the case at all when it comes to looking at the number of IPOs. There's far fewer. The IPOs coming to business actually have business models when back in 2000 they didn't, and these IPOs aren't even making money early on. So those people that are trying to buy on the day that the stock comes out are actually losing money. The early investors are still making a lot of money on these IPOs, but they're making less because it's selling off so quickly. So another cautionary tale of don't necessarily be so quick to buy an IPO the day it comes market, because that initial pop, if there is one, is not one that most of us are going to see. That's the one that the private investors got to see. So just something interesting there. The IPO market might be cooling a little bit, but I also think it's healthy that companies are rethinking their business models, rethinking when they're coming to market to make sure they're a profitable business so they don't get hurt by Wall Street. So just, again, not anything to go trade off of, not recommendation, not a stock tip, just an observation, especially because it's a company that I use daily and really like. So that's it for this week's rundown. I hope you have a great day. Make sure you read all the Mixtape articles below. There's some great ones, as usual. A lot of great writers out there. I want to make sure that I'm bringing them to you so you can experience those great pieces as well. So I will see you all next week. Check in on the rundown every day on your Amazon device if you want. It's the RLS Wealth Management Rundown. You can subscribe, and doing mini versions of these weekend reviews every day about some topic that's pressing at that time. So have a great day, and I'll see you in the next episode.